three big movers of the day. Here with our trades is Ava Ottos, CIO of ERShares. And first up, Ava, welcome. Second up, United Health, down today. U.S. has launched an antitrust probe into that company. What's your trade on the giant of healthcare?
This is a giant. It's a $500 billion diversified health services company, and it's in the eye of a storm. On the one hand, the U.S. Justice Department issued an antitrust investigation on them, and they recently faced a cyber attack from the well-known ransomware group known as Black Cat. So even though they have a revenue growth that's above average, in fact, it's 50% above average, their valuation is also 50% above the category. So given their relatively high valuation and the risk overhead they're now facing, and I think that's definitely a sell because the cost benefit here is not justified.
Okay, and it's interesting. Up next is eBay. The stock is on the rise after it did report its results after the bell. This one I do find very interesting for a lot of reasons. It's in the online space, but obviously deals with a lot of resale, refurbished type items. What do you think about this one? It did also, we should note, hike its dividend by 2 cents, announced a $2 billion buyback program as well. So what's your trade for eBay?
eBay, I think it's a hold. We need to mention that they are having a good day today after beating guidance expectations. But this is a company that over the last 10 years has not seen a margin improvement. In fact, even though their valuation is 1/3 below its peers, its net income margin is 27% compared to -7% for its peers. Its revenue growth is less than half its peers. And over the last 10 years, the company is down by 40%. We think it's on a downward path. We don't believe things are changing anytime soon. And there are better options in this category. We believe investors should not look any further than Amazon in this case.
What's their fundamental problem, Ava?
So their fundamental problem is that their net income margin. So their net, even though their net income margin is improving and it's up 27% compared to 7% for its peers, its revenue growth, they're not growing as fast as the other competitors. There are other competitors, they're taking away market share from them. Amazon has economies of scale. No one can compete with Amazon. At the end of the day, I think they're going to lose the race. We already have signs. I don't see how eBay will ever win over Amazon. So I don't know why investors would choose eBay over Amazon in this case.
All right, let's move on to Beyond Meat. Shares are soaring as that company tops quarterly revenue estimates, announces plans for steep cost cuts this year. Your trade on Beyond Meat, Ava.
It's beyond me why investors would ever invest in this company. In the best case scenario, that's a short-term hold. I would say like even a 1-day hold or a 2-day hold, if not a sell. So their sales, general, and administrative costs have doubled in the last 4 years. Their gross margin went from positive 34% to -24%, and the debt has skyrocketed by 17 times from 10% to 173% in the last 4 years. So we are seeing costs skyrocketing, debt is skyrocketing, margins are plummeting. I don't see why investors would be in this company. Today they're having a great day, but I think that's a short squeeze. 1/3 of the shares outstanding are short. So in the best case scenario, short-term hold.
You know, I really like a clear recommendation, and I think we got it on that one.
Beyond Meat, Beyond Ava.
Yeah,
Love
exactly. Ava Ottos, thank you very much for joining us. Good stuff.
All right, still ahead, Apple slamming the